9:40 or so this morning, the Treasury Secretary, the Wall Street Journal moving a story says, quote, White House considers slashing China tariffs, could be by half, to de-escalate the trade war. Trump hasn't made a final decision. Treasury Secretary, within the last hour, no unilateral offer from Trump to cut China tariffs. Full China trade deal may take 2 to 3 years. What do I do with all that?
This is exactly why we said on Monday it's very difficult, based on where the market was, to think that you could play the market from the short side and expect downside, because you get the tweet. So you have a very clear softening of the rhetoric over the last 24 hours. That is obvious to all of us.
Including our Eamon Javers at the White House today, who described it as a, quote, tonal change.
Clearly.
Tonal change.
Without question. With that being said, it still remains a highly volatile environment that dictates if you are active, you are trading. And I know a lot of people that watch the show, that's uncomfortable for them. I know for some people in our universe that's uncomfortable for them, but that's what it is. It is a trading environment. Yesterday, when Treasury Secretary Bessent's comments came out regarding what he said in a private closed-door meeting, you saw the rally in the S&P, okay? I was able to buy some S&P futures. I rode the S&P futures along the way in extreme volatility. And then guess what happens? The market literally slams into the ceiling this morning, and we have a chart to show this. So while you have all this crazy volatility, treacherous environment, mercurial nature of markets, you actually have some technicals that you can rely on. So let's show this chart. If you look at the month of March, what you will see that in the low for March, 5488 is your number for the S&P 500. That actually, which was the floor, now becomes the ceiling. On April 9th, time to buy, right? Time to buy. The high that day, the intraday high is 5481. Today we get up to 5469. And foolish me, I didn't sell my S&P futures there. I'm still sitting with them. I have a stop down below. Can't lose money on them, but certainly I should have been a seller up there.
It does appear to me, based on this tonal change from the president himself, and I think we can agree, if you listen to his comments and you read between the lines and you listen to Eamon's reporting, which I advise you do, because his on-the-ground, boots-on-the-ground stuff at the White House yesterday moved the market. Describing this, Weiss, as a, quote, tonal change, that it appears to me that the markets have gotten the president's attention. Maybe a little bit later than people thought and expected, but there seems to be less tolerance for some level of volatility, especially as it relates to what's been happening in the bond market and the currency markets because of the commentary about the Fed chair. So the president softened his tone regarding Jay Powell. Undoubtedly did that. I'm trying to figure out what you guys are supposed to be doing in this market, because on Monday when you were on, I asked you, when you were really describing how negative you were, unquestionably. Are you 100% in cash, I asked? You said, I'm almost completely hedged. I have very, very little exposure.
Right.
This morning you told our producers, I've kept most of my exposure except for sales in Amazon, Google, due to concerns about cloud and consumer spending. Just, can you square that for our viewers?
Sure, absolutely.
Please?
So when I hedge, I'm hedging with the indices, with the Qs or VOO. And the reason why I do that instead of selling my positions is because I know, as I've said before, this is going to be a headline-driven market. So I'm able to take those off quickly, and I'll incur my gains on the taxes from short-term trading in those. And I did have gains in those. So keep in mind, when I initiated my bearish outlook and went to 75% cash, it was almost on the day when he was inaugurated. So none of this is a surprise. So that's how I'll continue to play it. I'm not selling Meta. I'm not selling, even though, frankly, I've considered, because his legal problems, continue to materialize, I do have concerns. I've not sold Microsoft, even though I harbor cloud concerns there as well. But I can't have no exposure. I like those for a very long-term play versus the ones that you mentioned purely for the cloud and for consumer spending on both Amazon and Google. So look, the way I look at it, my view hasn't changed. You know, one day of him negotiating against himself, as we've seen, should not be applauded by the market. You know, this market is trading like it's watching Hulu, where there's a new episode dropping every week, and that in a compressed time, versus like Netflix, which is what the market wants to see, where all the information drops at one, and you know what the story is. So
all right,
that's
good analogy. I can get behind that.
Yeah,
it's a rare, good analogy, but nonetheless, we'll run with it.
I remain bearish and concerned about the economy. Okay, the economy, CEOs are not going to change what they've already stated is we're pulling back on investing because they don't know where the road is.
Okay.
That's going to drive the economy into recession.
I feel like anytime people of Ken Griffin's stature speak publicly, that it's worth bringing the headlines to all of you. Obviously, the head of Citadel is speaking at the Semaphore World Economy Summit, in which he has said I'm past this, within the last 20 or so minutes, that the trade war has devolved into a, quote, nonsensical place, and that the United States is eroding its brand. That's what Ken Griffin has had to say. I think everybody has been watching. And I bring you this, too, because Ken Griffin, the stature that he has, obviously, the position in which he sits, the company which he runs, and he's been a supporter of the Republican Party, a donor. He's not naive to the issues that have surprised a lot of people who have been on that side of the support space. This trade policy, which caught a lot of people off guard, and it surprised a lot of people in terms of what they thought and what is, and how to invest in that environment. What do you make of what Ken Griffin has said in the greater context of what we're supposed to do when you have the president, the Treasury Secretary making the comments that they did, and the market's just reacting to everything?
Right. Well, I think it's a little silly that the market's reacting to everything, because we kind of knew, I think, at least if you looked at Trump 1.0, you kind of knew that you were going to get this. I mean, I think this is on steroids. But when I think about that specific Ken Griffin comment and how it relates to the market today, that's actually not a new comment today, right? That kind of thought about the trade war is chaotic and it's eroding our brand, that's been out there for, frankly, before Liberation Day. People have been talking about that, and it's real. So he's right, but he's also not telling us something that we haven't known and haven't digested. When we were talking before about the tonal change, how long is that going to last? Like 10 minutes? I've been thinking about how whenever you go to visit a friend in Florida, the joke in Florida is always, for the people who live there, like, oh, you don't like the weather? Wait 5 minutes, it'll change. Like, oh, you don't like the tone? Wait 5 minutes, it'll change.
So, yeah, but are you sitting on your hands because you're afraid the tone's going to change 5 minutes?
I'm never sitting on my hands. And I also want to make a point here. When I get bearish and I think the market's going down, it doesn't mean I'm selling out the portfolios or the stocks. I believe that you do not trade in and out to get around bear markets. I believe that you stick it out through them.